Dr. Simon Collins. How are you? Thanks for joining me on the show today.
Hey, thanks very much for having me, Darcy. It's great to be back.
So I want to start with something that was topical when there was this announcement, this amazing announcement around this 2 billion New Zealand dollar fund that BlackRock was doing this deal apparently with the New Zealand government. General thoughts at a high level from your perspective around this initiative, which is designed to get capital moving in the right places so that we can actually transition towards renewable energy here in New Zealand 100% at some stage. What are your thoughts on that?
Yeah, I think it's a very interesting move, isn't it? And I have considered it from the perspective of who initiated this, right? Did BlackRock approach the New Zealand government and say, well, we're large investor in renewables and climate positive funds. If we were to position in the New Zealand market, what incentives could you offer us for that? Or was it the other way around? New Zealand government saying, look, the market's not working to attract renewables. Where's the capital at? Would you guys bring capital if we incentivized it enough for you? And I'm trying to understand that because, of course, I think in our sort of pre-discussion, you flagged that there is a big question mark over whether New Zealand capital markets and KiwiSaver, etc., had the same access or the same opportunity to start a similar fund. And so this whole thing has that kind of question mark over it for me. At the end of the day, I know that BlackRock are large investors in clean energy. And so it seems pretty obvious to me that they step into a market where the space is generally underperforming for the sake of a lack of capital.
It, in my mind, seems a little bit unreasonable to say within a relatively short time frame that it's a market failure that stops it from happening. Like the free market is at fault because we're not there right away, right? Like in reality, I wonder if the deal that BlackRock and the government did was, hey, government, get out of the way and let us actually do this.
It's hard, of course, to separate the government from the energy sector in this country because the energy sector is effectively 51% owned by government. So all your large gentailers are all 51% owned. There's obviously another tier down of generators, and there's even a kind of a lower tier below that, which are purely private. But at the end of the day, the mechanisms by which we attract new investment in generation are typically private, and there's no real incentive over the existing market mechanisms to create extra value for new entrants to the market. So what typically happens for wind, for example, is that a international developer will identify a high velocity wind site or high volume wind site. They'll do the due diligence, they'll do the economics, they'll get resource consent, and then they'll build it, and then they'll divest that to a local operator. And that tends to be the business model. And I guess the way to look at it is that while the wind is there, the financial argument to go through that process of due diligence, deployment, and then sale is just not making it worthwhile for a developer to do that in New Zealand, whereas they may well be doing it in other countries. It is growing in New Zealand, don't get me wrong, but Transpower have flagged that it is not growing at a fast enough clip to hit the required milestones to help us decarbonize. We have an increasing demand and we have an increasing need for renewable energy. Back to BlackRock, I wouldn't be surprised if somebody at BlackRock had analyzed the entire world and said, where are the countries that will be receptive to foreign direct investment? And where are the countries that have identified and have clear directive to decarbonize, but are currently underperforming on that metric? Right. Unsurprisingly, New Zealand's on the top of the list, right? And what can we buy them out for at the lowest price? Because let's not forget, BlackRock didn't get to be the largest assets under management firm in the world for not being very opportunistic. And they don't just move needles, they make the needles to move, right?
When you think about this as a signal to just a regular person, an everyday investor out there looking at the future and the markets ahead and your portfolio and trying to think, how can I get a rate of return? One of the cool things that you can do is look for where the whales hunt. And if there is an opportunity that's been sniffed out at this level, then surely there is a lot of value that's waiting to be unlocked. And from my perspective, I would love that value to be decentralized and sit in the households of regular people rather than sit in a chosen few or a fund manager in this case. And
Yeah, yeah,
I
yeah.
think,
Let's compare and contrast, right? New Zealand and Indonesia. So Indonesia have recently passed an omnibus law, right, that replaced two or three hundred pieces of outdated legislation with a single piece. And in that legislation, they removed the requirements for new renewable energy generation deployments or developments to be a certain proportion locally funded. Now, a renewable energy generation development can be 100% foreign funded. And that's obviously huge for Indonesia in unlocking what is the world's largest latent and unaddressed renewable energy opportunity. Do we have a BlackRock fund for that? Not to my knowledge, right? But in New
yeah,
Zealand, you have a very stable state. You have a country that you know is going to be there in its way, shape, or form in 2050.
no, that would make sense. And I was listening to recently. I was listening to a fellow by the name of Blair Walter on the
Yeah, no, Blair.
Transformation of Value podcast by Cody Ellingham, and such a good chat. You know Blair, and he was kind of what I took out of that was that it's almost like a chicken and egg situation when it comes to renewables, where you need to have the demand to justify the investment, I guess, in the infrastructure to carry the power that you're creating, the new power that you're creating from where it's being generated to where it needs to go. So you need
Yeah,
that demand to justify it. But then on the flip side, you need the incentives to create it. So I guess what you're saying is that it's probably a little bit of both, isn't it? It's about the market trying to figure out a way to function really, really well, the free market, but also law changes like what you were saying before, where you're actually making it attractive for foreign direct investment, perhaps. Is that kind of like a little bit of both, do you think? So it's not fair to say, hey,
yeah,
it's a government problem, it's a private sector problem, it's an everything problem, really, isn't it?
totally. And look, at the end of the day, right, it comes down to supply and demand.
Yeah, that's
I'm a
right.
very large energy user, right? But I want the lowest cost possible. Flip side, you're an energy producer, you want the highest price of energy possible. But unfortunately, the effect of bringing more capacity online, more generation capacity online, should theoretically be lower prices because you're increasing the supply. So it is a chicken and egg or a catch 22 because when you bring 200 megawatts of wind energy online, what should be happening is that you're reducing the price per kilowatt per megawatt wholesale.
Yeah, so you want there to be less supply in the market to maximize the sale price for what you're getting rid of. But in a sense, we're trying to do the opposite. So I guess the solution lies in finding more demand, which is outside of a retail, traditional retail or industrial commercial consumer, right?
And how's this? Imagine if you could create a situation where more supply led to something that was more scarce.
More supply led to something that was more scarce. Where could this come from?
It starts with a capital B.
It does indeed. Well, let's get into that, and let's maybe start on this discussion. I know that was like a lengthy introduction, if you like, but tell us what Stacker does.
We're a Bitcoin mining company. We take scarce supply and turn it into even scarcer money. But in New Zealand, we do that specifically with renewable energy. And we do it specifically in ways that integrate deeply with the energy market so that we are not only paying generators for their scarce electricity, but also creating value for them so that they have the funding to build more renewable energy, to create an economic argument to deploy renewable energy in the first instance, and in a way that ensures that the pricing of energy remains stable for commercial and residential end users.
For those that don't really understand Bitcoin or mining or solar or
Sure.
renewables, there will be some people that are kind of coming into this cold. And so, just to provide a really straightforward example, we know that, or we've heard, at least through the media, that the cost of creating Bitcoin or mining Bitcoin, and maybe talk about what mining is, but
Yeah,
we know
sure.
that the cost of producing the energy or the cost or the amount of energy that is producing to create one Bitcoin is enormous. And we've been told that as a result, Bitcoin is bad. It's an unethical asset to hold because of the amount of energy that, in theory, it's robbing from people, and it creates more fossil fuel consumption. So tell me though, what is Bitcoin mining? So Stacker is involved in Bitcoin mining, but what
Yep.
is it?
This cuts to the heart of a lot of the criticism that Bitcoin gets. People think of Bitcoin mining as kind of a couple of things. One, it's almost like it's pure random chance, right? You set up these massive warehouses or you deploy these containers all over the place with expensive computers that use a lot of electricity, and they are all mining, searching for Bitcoins that are somehow hidden in an algorithm, and that it's a pure random chance, and that there's no value to it other than the acquisition of Bitcoin, right? That's something that I come across a lot, and people
Yeah.
think it's just crazy and an insane waste of energy.
Yeah.
That's not what it is. I think mining is a misnomer. Like gold mining, particularly, is incredibly toxic to the environment, leaves behind huge amounts of arsenic in the soil, which just is impossible to remove over time. What Bitcoin mining actually is that we are the security team for the network, right? So Bitcoin mining is a massively distributed network of computation, and we constantly solve more and more difficult maths equations, algorithms. And the point of that is that it means that no single actor or group of actors could ever get together and go, I want to create more money in Darcy's wallet than is actually there. And when somebody wants to do that, they would need to get so much energy and so much hardware together that it is disproportionately expensive to try and create mayhem on the network in that way. So mining is an extremely important part of how Bitcoin works, because in the 11 going on 12 years of Bitcoin's entire existence, nobody has ever double spent Bitcoin, right? They've never spent money that was in their wallet and then one moment turned around and then spent it again.
Mm.
Nobody has ever created money that didn't exist. No one has ever created a transaction between accounts that wasn't actually made by those accounts. Sending a Bitcoin transaction requires no energy.
Right.
There's no energy per transaction. It doesn't cost anything in energy to broadcast a transaction. The network would use that energy anyway to provide security. If
Okay.
you wanted to kind of divide it per transaction, you actually divide it by every single transaction that's ever been. Because every 10 minutes, all of the miners around the world take all of the energy that we've used and we revalidate the entire blockchain back to the very first transaction. And that's how we know that no transactions have ever been falsified, no fake money has ever been created on the Bitcoin network, because we revalidate using that energy every 10 minutes.
Yeah.
So how is that energy use good? Well, 300 plus million people around the world are Bitcoin users. A huge number of those people are vulnerable. They are the victims of either economic oppression or financial incompetence by their governments. They may live in unsafe places around the world, and they may have a particular need for protection against hyperinflation, poor monetary controls, all kinds of kind of financial malfeasance. Bitcoin allows them an escape valve or an escape route to protect themselves and their wealth from that kind of thing. And we are of the, well, most of us relatively well-off New Zealanders are in the 1.5 billion out of about 8.5 billion people in the world who have access to what you could only consider elite tier financial services, right? There are 2.5 billion people in the world who are completely unbanked. They have access to no financial services whatsoever. And then there's a middle tier of about 5 billion who are underbanked. And so Bitcoin again offers these people an escape route from what are often very predatorily priced services in this regard. If you were to ask someone who lives on the North Shore of Auckland and has a very fat KiwiSaver and owns a house, or someone in a similar situation on the North Shore of Sydney or New York or wherever around the world, is all this expenditure of energy valuable, they would probably say, no, I've never used Bitcoin in my life. Why would that be valuable? But if you're a refugee from Venezuela into Colombia, if you're from Nigeria and your central bank digital currency collapsed on its first day, or if you're in Ukraine, or if you were a woman in Afghanistan who wasn't allowed by law to have access to a bank account, you would probably consider it extremely valuable energy expenditure to give you access to the kinds of remittance services, savings services that we take for granted.
We just genuinely don't see anybody else
100%.
other than
Yeah, that's
ourselves,
right.
right? Yeah.
That's right. And comparatively, the financial services that we access on a regular basis use disproportionately high amounts of energy as well if you put them on a transaction to transaction basis.
But let's not forget the complicated war machine that gets wrapped around financial systems as well.
100%.
So
Yeah.
there's a lot of pain in that, and I've been thinking a lot about it's not too often, but maybe about 6 times a year when I do these podcasts, there's a couple of episodes that really, or a couple of conversations that really strike me to the core and leaves me with a taste in my mouth, I guess you could say, or in my mind that I chew on for a while. One of them was when we caught up in January. One of them was recently when I caught up with Jeff Booth and we were talking about abundance, basically,
Yeah.
and how in a Bitcoin denominated world, effectively you have a deflationary system which decentralizes wealth in the hands of everyday people that have traditionally been oppressed, and in
Yeah.
a fiat system you have the opposite going on. And so that's why, again, I come back to this power thing. If we're trying to move from fossil fuel based power generation, or any type of power generation which causes a lot of harm, and if we're going to move to more renewables, then it almost has to happen in tandem to moving to a decentralized financial system, which is deflationary, because you can't mix oil and water in this transaction. And that's why I think, like, if we're going to really move towards increasing the security team around Bitcoin, we kind of need cheap energy, right?
Yeah.
If we really want to make sure that our financial system globally is strong, we need to get off the war. So all of these things are operating in parallel, which I just find that really intriguing.
Yeah, that's right. That's right. I mean, it's so interesting. And I was at a conference in Sydney, the Bitcoin Alive conference in Sydney earlier this year, and one of the presentations was called Bitcoin Inventional Discovery.
Yeah.
And it was a really interesting way of framing it because, of course, you could ask the same thing about money, right? Was it an invention or discovery? Did we invent or discover the crucial tool that became the nexus of society that allowed trade and enterprise and community integration and specialization to develop? And off the back of kind of perverting or distorting that through the fiat system, did we invent or discover a better way of denominating in the world and creating the network to exchange that? And I think it's really interesting that it comes at a time and is so complementary to the world's need to decarbonize. And
Yeah.
so,
Yeah.
the question for me very much is like, what is the best way to integrate these two absolute global necessities, right? Fix the money, fix the world,
Yeah.
fix the energy, fix the world. Like,
Yeah.
we're at the intersection of those two things here.
Yeah.
And from my perspective, right, is that we have the opportunity to use Bitcoin to overbuild our requirements for renewable energy, right? Let's build way more renewable energy generation than we need, and then let's soak up the excess with Bitcoin. And so, we have this high intermittency with renewable energy, right? Wind doesn't blow all of the time. Your average wind farm around the world, if you build 100 wind turbines, 30 to 40 of them are generating at any one time.
Okay.
Solar, very clear intermittency, right? It only generates during sunlight hours. So, the curve is like this during the day. You get maybe, if you're there are 2 bands of really high solar radiation around the tropics, and they get 6 or 7 hours of peak generation a day.
Yeah.
But as the world turns, more solar comes online because Bitcoin's a distributed system. If you're connected to intermittent systems, you don't necessarily lose your security team's budget of energy as the world turns and wind comes up and down and the sun goes up and down. You don't necessarily lose that protection of the network when the sun goes down and you've overinvested, everything is in Texas, and the sun goes down and there's no power. Well, all of a sudden it's a great time to attack Bitcoin because there's 60% less energy on the network. No, we don't have to compromise like that. We can distribute Bitcoin around the world. We can generate energy around the world from renewables, and we can account for that intermittency with, that distribution. And when we overbuild, we provide supply to the grid, the regular consumers that are needing energy as well. But we've massively improved the economic case to generate that electricity and to do the millions, tens of millions, hundreds of millions, even billions of dollars of development to generate that energy.
Yeah.
We've offset that cost right from the start, right from the first solar panel that goes in, right from the first turbine that goes up. We can be generating return on that investment with Bitcoin.
Yeah. Okay. So let's just think about this in terms of one Bitcoin is going to take a certain amount of energy to produce it. So there's two things, right? Like the price of Bitcoin, hopefully, and will over the long term go up, at least denominated in fiat. And then the cost of producing that energy over time, hopefully, will go down thanks to the transition of renewables. One form of energy production is relatively low startup, but it's really expensive over the long term. That's, hydrocarbon based production. And then the other one, huge capital outlay at the start, but then it's just like the profit just increases over time because your costs were all up front, and then you've got depreciation and stuff. So
exactly.
maybe,
So I like to think of that in terms of there's no marginal cost per unit of energy, right? Yes, there's a baseline cost of maintenance, etc. But the wind blows, the sun shines, water runs, heat comes out of the earth for geothermal. You're not paying for the next shovelful of coal. So once you've got that outlay of capital up front, as you say, your energy is basically free from the planet, from the sun, from the earth. So extremely, extremely well priced. And when you're a Bitcoin miner, that's what you want to see. Like if there's enough renewables, you're close enough to them, maybe you own some of them, you can get your price as proportion of your inputs down really, really low. And that gives you money to reinvest. Do you reinvest in more capacity, or do you reinvest in more energy? Do you reinvest in distributing your energy generation? All sorts of good things can come out of increasing the margin. Yeah.
Amazing. So let's maybe start with just something like really, really small micro one. And I was mentioning this to you before. We have an off-grid property which produces maybe, I don't know, about 10 kilowatts of surplus power a day, right? And I'm aware that you can buy these very tiny mini miners that you could basically just plug in with the use of Starlink satellite internet, where we're off grid in every sense, right? So if in this place there's Bitcoin mining, then effectively we've monetized our surplus power production that we don't need. And so that's obviously at a very small scale. Why would we ever make more solar panels when we already have more than enough as it is? Well, the only reason why would be because we want to generate more power so that we can do more Bitcoin mining. But eventually the case will become, well, maybe we just take care of our neighbor's power supply. Maybe we take care of the dairy farm down the road. Maybe we just keep on scaling and scaling and scaling. So that's kind of like a little microcosm example, I guess you could say, of how you can start by scaling and solving this chicken and egg problem, right?
That's such a great kind of illustration of the opportunity to overbuild renewables.
Yeah.
Because you've got a monetizing system in the background, that means that you can do that, right? Like there's no barrier to supplying energy to your neighbors or putting panels on their roof or paying for the deployment of solar for the dairy farm down the road. When you have a monetizing asset behind it that allows you to do it, and it's almost like an altruistic kind of driver, because hey, look, I'm going to build, a megawatt of energy on your farm. Well, I'm prepared to build a megawatt of energy on your farm. I need about, 500 kilowatts. You can have the rest, because not only does the Bitcoin mining value that you get off it offset your cost, but in effect, that's rent for their space that you might use.
Yeah.
But then there's flow-on effects for them getting free energy down the road. Can you imagine that on a social scale, like on a society level? Kind
Oh,
of,
yeah.
it's linear scaling or even exponential scaling. Like there's no diminishing returns on this. You just add Bitcoin as you add generation, and
Yeah.
you monetize the generation.
Yeah. Effectively,
Yeah,
you're copying what happens in the Bitcoin financial system, where things are deflationary. There's exponential curves, but the value that that exponential curve extracts accrues to you, not
yeah,
a
yep,
centralized authority above
exactly,
you. So that's why
exactly right.
like every time I think about that, my mind just gets blown. But so this came from I was in a bus and we were driving to the airport. My boy and I were sitting together. Our family went away overseas recently. We went to the Bahamas, and we were just talking about how there's all these islands everywhere. The Bahamas is a nation, 700 islands scattered everywhere. A lot of them really hard to get to. Some of them, I understand, don't have services out there, so they kind of have to be off grid. No capital gains tax in Bahamas. No income tax. There is taxes,
Yeah,
VAT, stamp duty, stuff like that. But I just started thinking, well, what would it look like if in this place where it's just like literally soaking in the sun's radiation along, a lot of the time, what would it look like if in one of these areas where the land is relatively cheap because it's not desirable for some reason, it's relatively remote, there's no services connected to it, most people would write it off. But here we with Bitcoin, we have the possibility of building a massive solar arrays everywhere, maybe some wind turbines, and as long as you have Starlink set up, or a few, I guess,
yeah,
you're in business. You don't need cables going out there. You've basically created a power production plant out there, which can then feed other development around the area. I believe in the Bahamas, as an example, there's something like 98% of the energy is not coming from renewables. So yeah, if there's a spillover there, that's going to help in terms of soaking up that excess production. I looked at it here in New Zealand. Um, Obviously there's blockages. I'm at the stage, looking at this where it's, I guess you could classify it as uninformed optimism. But as you go through the due diligence process, very early stages, you start to realize that there's some serious constraints, and some of them are regulatory. A lot of them are, and
yeah.
some of them are just logistical. But at a high level, Simon, you're the man to talk to around this. Do you think there's a business case for even just an operation where something like that in a remote area? Do you think something like that could actually be viable?
Look, I 100% think that it is. In fact, again, slightly more detailed than back of the napkin analysis kind of validates it quite
Yeah.
quickly. The question you want to answer on a project like this is how much energy you've got and how long have you got it for, right? Because Bitcoin mining wants to be mining 24/7 if possible, right? That's the best case scenario. But of course, the sun only shines, 12 hours, but is also only peak production, only peak sunlight hours for about 6 hours a day, maybe 7 hours a day in the, extremely, extremely high solar radiation parts of the earth. The rest of the time, you've got a sort of a slow ramp up to full capacity. There's a bunch of stuff to consider here. And going back to the fundamentals, right?
Hmm.
When you mine Bitcoin, depending on the operation, 60 to 80% of your inputs are electricity, right?
Right.
So that's the business. We convert electricity into Bitcoin. And when we do that, we want to do that at as high a margin as possible. Obviously, we're a business. And so, for example, the break even price for Bitcoin at the moment is kind of 13, 14 cents US.
Per kilowatt.
So per kilowatt hour, yeah. For the last quarter, the last quarter's results for the large publicly listed Bitcoin miners, in particularly in the United States, their average purchase price for Bitcoin was about $8,620 something dollars.
In the form of
That
the
means that,
electricity that they bought.
yeah, that's right. So that's doesn't take anything like depreciation or
Sure.
any of
Okay.
their sunk costs into account.
Okay.
It's purely the variable cost input, right? So
Right.
that amounts to about 4 cents US, 6, 7, 8 cents New Zealand.
Right.
So their margin is basically 66%,
Okay.
right?
Oh, okay.
They're
Okay.
basically 3xing their money. Bitcoin's about 29,000 US. today, right? So they're kind of 3xing their money, and of course their hope is that that Bitcoin increases in value over time.
Right.
They want to sit on as much of it as possible. That's always been the model: is they mine Bitcoin, sell as little as possible for their costs, and sit on the rest. And what's inherent in that number is that they don't own the means of production, right? They don't generate their electricity; they buy it at a per kilowatt price. They participate in demand response schemes, right? Which means that when there's a massive winter storm or a summer heat wave in Texas, they will voluntarily turn off. They usually voluntarily turn off because they get a price signal. When you generate your own electricity, that $8,000 or that 4 cent per kilowatt goes right down to as close to zero as you can possibly maintain. Like, so you've got, let's say you've got a solar plant with some batteries to keep your draw going 24/7. You've got someone to come around and make sure the batteries are functioning. You've got someone to come around and make sure the panels are not dusty and they're generating at as much as capacity as possible. Someone to come and make sure that the Bitcoin miners aren't dusty, getting too hot, all that kind of thing. That could potentially just be one person if you've got a small enough deployment, or you may have a small team. That gives you good economies of scale as you get bigger and bigger. But at the end of the day, you're bringing that cost per kilowatt down to as close to zero as possible. And so you're converting energy to Bitcoin at a 100% conversion rate.
Yeah.
So it's incredible because not only do you get pure return on your investment, it's like you were saying earlier, you've got this massive upfront deployment cost. Once that's out of the way, it's basically pure profit. And while you may sell some down to cover the cost of those people, you also get to sit on your treasury of Bitcoin for as long as you feel like. And if you're as convicted as I am about how Bitcoin is programmatically required to increase in value over time, with, of course, a cyclical, you may mine Bitcoin today that you might not sell for 10 years, and you may see tens of thousands of % return on in the long term.
In the fiat world, let's just say, tackle this from an investor's perspective. This wouldn't be like investing in a bond, but there's probably some similarities. It's almost like an annuity where you put a big chunk of money into something and you get some cash flow back over time, except in this case, you're putting fiat into a box. That box just happens to be a solar farm and Bitcoin mining operation. And then you're getting Bitcoin back as a constant income stream, which, like what you're just saying right now, is programmatically aimed towards going up in value. So your the financial overlay here is just beautiful, to be honest. Like the way that looks is just amazing. Sorry, keep going.
Yeah. So look, so that's the business model, right? It's acquire land, acquire the means of production and conversion, and then it's just harvest, and there's some maintenance and some upgrades over time. But the scaling model is to either redeploy invested or your mined capital to increase capacity, or you could continue to grow through dilution by selling a further bond or equity in the original entity. If I was to build this thing, right, I would, let's say we want a megawatt of Bitcoin mining. I would provision something like 4 megawatts of solar, right? You've got 6 hours a day of peak production. You want to store some energy for the 4 other periods of the day that you can't cover and store them in some batteries. Your batteries charge up over the day, and your Bitcoin miners draw directly from them. If there's any energy left in the batteries after a day's cycle, you can sell that to the grid in the location that you're at, right? So how much is going to get into the batteries, how much you're going to draw out of the batteries, and so therefore you know how much you've got left. And what you can do is you could do two things. You could let it go consistently at a low ebb and see a return on that, so then you've got a per kilowatt price for that energy. Or you could release it when the demand from the local users was particularly high. And in New Zealand, you would do that when everyone comes home at 5 o'clock and plugs in their car and turns on their oven and does all that kind of thing. And what you could do there is you could get extremely high rates per kilowatt that you release onto the market, because
you're
of course,
kind of just switching the dial, aren't you? You're kind of going, right,
Yep,
battery, Bitcoin grid, battery, Bitcoin grid. What is the most efficient blend at
exactly.
all times? And that's one thing
So
just to
you,
point out here, Simon, as well, that people might not understand is that with mining, you can turn the mines, you can turn the gear off, right? And you
yeah,
can
that's right.
scale them up and down.
You turn them off like that.
Right.
And you could also turn them on in single units. You could turn them on in blocks of 10. You could turn them on in percentages. I think we could do a huge amount of benefit to local grids in New Zealand. We could also do a huge amount of good for local grids in wherever you've got your asset, while also generating wealth from the asset for yourself and investors.
And we were talking before just about how these mining rigs can be basically, well, you can buy a container and it's already from the manufacturer already set up as a
Yeah,
shipping container, so it is mobile. So you could
100%.
effectively move the power consumption of a mining operation geographically as it suits. You could effectively get an old get an old ship, get a ship basically, and put all the mining gear in a ship and just cruise around to wherever the power is the cheapest. You could put it on rails. You could whatever, right? Like that's
Yeah.
kind of the idea here, isn't it?
Yeah, that's absolutely right. Yeah, yeah. There's no stopping you from doing exactly that. In fact, maybe the Bahamas is a particularly attractive place to put a bunch of mining rigs on a yacht and
Yeah.
sail from place to place, offering cheap energy. Right?
And what like is there?
Yeah,
There's got to be some sort of sweet spot. You and you did some calculations here for me, and I'm trying to understand them. Little bit beyond my pay grade, but it it feels kind of like there is, in a sense, if you put money into a mining operation, even at a very micro level, yes, you're going to get a return from it. Like if again, I go back to our surplus renewable energy that we are
yeah,
creating, if we put that into some mini miners, then we will get some sats, right? Like we'll get tiny little fractions of Bitcoin in
yeah,
exchange for that. So there is a return and it's better than the kick in the head. And that's with current Bitcoin prices, which again, denominated in
yeah,
fiat, will be quite valuable one day, we would like to think. Um, but at some stage, you've probably got a sweet spot, don't you, where the coverage on land, the investment in equipment, the batteries, the maintenance, all that sort of stuff. Is there a sweet spot, or is it really just truly exponential, like your decreasing cost of production, just
yeah.
infinite?
In this model, the land is the big driver of scale, right? If your land acquisition cost is, in the early seven figures, it kind of behooves you to be targeting, and I think you threw in our pre-discussion, you threw a pretty good number out actually, which is about 50 Bitcoin a year,
Yeah,
right? So that's today's prices is kind of $2.5 million
yeah,
in revenue, but realistically, it's more like if you were to start mining 50 Bitcoin today with 2.5 ish megawatts of energy of capacity, you'd get to $3.5-4 million of revenue by this time next year. That increases to $5 million in revenue in year two. It's a very good money multiplier. But of course, if you're going to spend a couple of $1 million on land, yeah, you want the scale of the initial outlay to kind of match it. Now, if you could get 50 square meters of land for the relative cost of that, that's fine. And you could put a couple of
yeah,
hundred kilowatts on and a couple of hundred kilowatts of miners, that would be perfectly fine. But yeah,
yeah,
the big driver of scale, I think, is the land investment cost. Everything
yes,
else is pretty much a linear progression,
yes,
and so the only thing is your kind of your logistical construction and deployment costs are obviously a considerable factor.
yeah,
But once you've got your maintenance and kind of management, sorted, and the management and administration of this can happen anywhere in the world, right? Stacker have written software that allows us to uh, access any single machine in the world using an API, um, work out whether it's working or not, work out what's wrong with it, remotely restart it. So we can almost do everything except plug it, unplugging it and plugging it back in again from anywhere on the planet. And that has been part of our motivation for doing that, has been exactly this kind of potential deployment in the future, is that you may find yourself with some very distributed uh, assets around New Zealand or around the world that you
mm,
need to make sure that you are optimizing for your return on investment per dollar of invested capital. Other than a single person who needs to go around and plug things in and unplug things and dust things and document any faults that aren't fixable on the spot, your maintenance cost can be minimized to the point that once you're at scale, you have so many devices, so many panels, so many batteries that eventually you start to get kind of a consistent amount of hardware failure, which then you would find the right person or people, in country to kind of to address. But again, it turns out to be such a small proportion of your total revenue that it's once you're at that kind of 1, 2, 2.5 megawatt scale, it's pretty immaterial to the actual running costs and profitability of the enterprise. So scale is obviously consideration, but again, it's what are you paying up front for where you're going to put this thing?
Yeah. And so like what we've kind of been talking about so far, like maybe 80% of it has been under the assumption that there's no blockages in terms of actually doing it. But then inevitably you're going to hit things like, are you allowed to do that specific activity on that specific parcel of land?
Yeah.
Then there is, what are the tax implications of that particular jurisdiction? Like here in New Zealand, it's a taxable activity, presumably mining Bitcoin. Would that be fair to say? Like if you are paying for electricity right now in New Zealand, you're creating, say, 1 Bitcoin, you then sell it. You effectively had a 0 balance, and then it was a 1 Bitcoin balance, which you then sold back into fiat. So that's taxable income, correct?
That's correct. So it's taxable when you convert your Bitcoin into fiat dollars. Yeah. So and especially when you're doing that at such a high level of profitability, like you are, in this hypothetical, in this hypothetical active business. So again, like a jurisdiction like the Bahamas makes a huge amount of sense because there's no tax on that activity. There's no company's tax, from my understanding. So the question that I have, right, is like, okay, so the Bahamas is obviously a very positive tax regime for this. My understanding is they're crying out for renewables deployment. They have a 2030 goal of 30% renewable energy, and as you pointed out earlier, they are 98.9% reliant on imported fossil fuels, 0.11% solar as part of their mix. So they are massively behind on their goals. They are massively they have a massive uphill battle in terms of getting the foreign direct investment all goes to tourism, right? Because that's where they've created the incentive structure for growth is around tourism. Collecting revenue through effectively just sales tax is
that's right.
A huge part of that, right? You get a bunch of people in who don't live there, they pay VAT, and then they all leave, and you've harvested them for the sales tax. Meanwhile, they created an incentive system for businesses to come in and be the vector for that sales tax to be delivered. They have a range of incentives for renewables in the country, and what I have seen through just a little bit of research is that there are some good businesses there doing solar deployments, and a lot of the large resorts there are putting in megawatt scale solar energy generation and battery storage to get themselves off a very unreliable grid in that country. So there's a lot going for it. It's in the band of really high solar radiation. It's not in the extreme high level of solar radiation around the world. Which leads me to another question, like, is there a system under which, or an approach under which you could, let's say, incorporate in the Bahamas, enjoy their tax benefits, but position this asset in somewhere like the highest place in the world for solar radiation, or the measure that is best for a solar deployment, which is the potential kilowatt of energy per kilowatt deployed, right? And you want that to be as high as possible. And that is in northern Chile, southern Bolivia. There's a desert that has the highest solar radiation profile on the planet. Northwestern Australia, obviously extremely high. There are parts of Africa that are also extremely high. Do you get a lower land acquisition cost, higher return per photovoltaic panel deployed um, in any of these places than in the Bahamas, where you get tax as well? And is there a way to kind of
Yeah.
string those assets together, or string those together to get the maximum
Yeah.
value for
Well,
investors?
let's say yes, Simon. Let's say yes. We can do all of that.
Yeah, right. Yeah, right. In a perfect world, yeah,
Yeah, because like really at this stage, once you can demonstrate at a business level, yeah, it
yeah,
works, then you go a little bit further and you go, well, what are some of the logistical challenges? And then yeah, really all it is just this regulatory blockages and multiple layers. And that I guess
yeah,
that's where we get to all the time with any fiat-based world. And that's why I think this is
yeah,
so fascinating because in a Bitcoin centric universe, we now don't even need the power grid to actually mine Bitcoin and keep
yeah,
the financial system safe. We don't even need a grid.
yeah.
In theory, you don't need government, but you can't really get away from a place on this planet, it seems, where there's no government control. Maybe unless you just, I guess, a floating barge in the middle of the ocean. That would be a good idea, wouldn't it? Um,
That's not impossible.
well, let's do that. Let's change
Yeah,
the idea. Let's just get a couple of
I
massive
mean,
barges.
yeah. Talk to me. Don't talk to me after the first hurricane, but
Yeah.
yeah,
Well, we could use all the floating plastic really as buoyancy. Yeah, we're really amping it up, aren't we?
yeah, yep, yeah,
Yeah. But like I
yeah,
guess what this conversation demonstrates is that there is a viable pathway towards monetizing the sun. And
yeah, yeah,
we can distribute the benefit of this infinite resource which is radiating our planet 24/7. We can monetize that and distribute the benefit to those who are open-minded. Simon, how can people reach out to you? Like,
yeah. So I'm very active on Twitter, but you can also find me at Simon at stacker.co.nz if you want to reach out directly.
can you spell that?
And Stacker, of course, we drop the E, so it's STACKR
Cool.
dot co
Good
dot
stuff.
nz. And yeah,
That's awesome.
I'm
No,
excited to talk more about this.
yeah, well, and so am I. Like there's something in it, right? Awesome. Well, thank you very much, Simon. Appreciate that, and hopefully you you do good things with Stacker. All the best.
Hey, that's the plan. Hey, thanks. We'll talk soon.